Is Joe Biden coming for day traders? If you day trade the stock market, you may have heard some chatter around this financial transaction tax, which has recently caught steam within the Democratic Party. This video is not an opinion on politics. This is simply me doing independent research around the president-elect's tax plan and how this may impact traders. This is not meant to be individualized tax advice. The pace at which information changes nowadays, what I say today may change tomorrow, so this is me looking at a point in time. Now that I got that out of the way, in this video, we're gonna be looking at the Biden tax plan and how this may impact day traders. Let's go. What's up everybody, Brian Rivera here, CPA, and I wanted to welcome you to the channel. On this channel, I typically talk about personal finance, entrepreneurship, and day trading. So if this is your first time around here, consider subscribing. So being an Army vet, one thing we understand is change. So it doesn't matter if you're in the Air Force, you're in the Army, the Navy, Coast Guard, Marine Corps, they all get it. Now, if you serve an active duty, you pick up and go every 24 to 36 months. You're moving across the US, you're moving your family across the world. It's a lot of different change that you have to adapt to. And I understand this is because one, I serve in the reserves, and two, I grew up a military brat. And wearing the uniform comes at a sacrifice that many are not willing to do. And I don't know how accurate this data is, but less than 1% has actually served in the military. So with that constant change in jobs, one thing that also comes to mind is you may inherit a leader that you vibe with, you may like, you may dislike, whatever the case may be. But one thing across all service branches stays status quo, and that is service members' ability to respect the rank and to respect the leader in the position that they hold, which is why I could care less who is at the top. So now with the potential shift in Washington, we could get a change in leadership. Obviously the process is still playing out, but assuming it does, what does that mean for the day trading profession? So I've heard everything from, holy cow, Joe Biden's about to destroy day trading, Uncle Sam is about to take all of my income, I'm leaving the country, etc., 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 etc. So in my humble opinion, if you are in a position where you have to pay tax, I would count it as an honor. Living in the United States, there is a lot of freedoms that are afforded to us. If you're in a position where you gotta pay tax, I would count that as a blessing. So like any good entrepreneur, we gotta stay ahead of the game. So we gotta plan for the worst and expect the best. So people who have a vested interest in their tax strategy know that there is absolutely nothing new under the sun. If something changes, they will adjust, they will adapt, and they will continue to figure out how to leverage the tax code in their favor. So tax planning is key regardless of what political party the president is in. The majority of the research that I have conducted was done at the taxfoundation.org. I'm gonna drop a link below if you wanna go out there and do your own independent research. There's a lot of different bullet points inside of that plan, but what I've done is I've pulled out 6 things that I think will be applicable to day traders. Day traders are gonna have an vested interest if you're watching this video. So the first thing I wanted to clear up is this financial transaction tax. What in the world is this? How does it impact me? And is this thing gonna destroy day trading? So the financial transaction tax, or FTT, it actually first gained traction during Senator Bernie Sanders' run for president in 2016. Progressive lawmakers have been pushing for this legislation for some time now. So after the results of the 2016 election were finalized, it kind of died off. You didn't hear much about it. Now during the 2020 campaign trails in the Democratic Party, you started hearing much more talk about this, and it gained a lot more traction. So don't quote me on these numbers, but the financial transaction tax, I've seen a couple different preliminary percentages. I've seen it where stock trades are going to be taxed at 0.2%, bond trades at 0.1%, and derivative transactions at 0.002%. Again, I've seen a couple different numbers, but the numbers I just quoted you were actually under Senator Harris's presidential platform. I think those were the numbers that were being floated. So under this FTT, when a financial asset, i.e. a stock, is traded, a certain percentage of the asset value is taxed. For example, if a day trader has a position of $1,000, they sell that position, if the transaction tax was 0.1%, they would pay $1 on that particular trade. Now, if your position size was $1 million, now that 0.1% on $1 million position is going to be $1,000, which is pretty significant because I know a lot of day traders who are trading size. Now, that tax can be levied on the buyer, the seller, or the intermediary, which is the stock exchange. So again, it's yet to be seen exactly where this is particularly going. Now remember, before you get your panties in a bunch, this is all speculation. None of this is legislation. Now the bad news for day traders, this was part of Senator Harris's presidential platform. She didn't get the Democratic nomination, but she is the VP elect. And if this is something that she's strongly passionate about, she could put the bug in Joe Biden's ear and he may push for it to go through legislation. Now the good news, I reviewed 26 different detailed bullet points at the Tax Foundation of Joe Biden's tax plan, and I saw zero mention of this financial transaction tax. The other good news, the federal government uses a system of checks and balances. And what that means is before anything can pass legislation, it's gotta both pass the House and the Senate. So for any major change to happen, it's gotta pass both of those floors. So although none of this stuff is certain, you wanna make sure you maximize the tax code to your advantage today, because you have no idea what can happen tomorrow. 2 is going to be a Social Security tax on earned income over $400,000. So what this is going to do is it's going to impose a 12.4% payroll tax on wages above $400,000, which is going to be evenly split between the employee and the employer. A hole in the payroll tax because right now the wage cap is $137,700. Now there is no additional payroll tax as your income approaches that $400,000 level. Once you hit $400,000 in earned income, the payroll tax now picks up at 12.4%, which is shared between the employee and the employer. Now, if you're self-employed, you're gonna eat both sides of that. Now, the good news for day traders, guess what? Your income is actually not earned income, it's capital. So if you hold your position longer than 12 months, then you're in long-term capital gains territory where you're gonna pay 0, 15, or 20% tax depending on what your tax bracket is. Now, if you're a day trader, you're flipping stock every single day, multiple times per day. So you are subject to ordinary income tax, but it's not earned income. So you don't actually pay payroll tax. So this is actually gonna have no impact on your ability to day trade. Now, if you day trade in like an LLC tax as an S Corp, this will only impact your wages. So if you don't pay yourself a wage of $400,000, then this is not gonna have an impact on you because the rest of your income is gonna come back to you in the form of a distribution. So number 3, the other change is gonna be is the top tax bracket is gonna revert back to what it was prior to the Tax Cut and Jobs Act. So right now, the top tax bracket is 37%. It's actually gonna get pushed up to now 39.6%. 2.6% shift in the top tax bracket, not a huge deal. However, it still is additional money that could have been in your pocket. So taxes on long-term capital gains and qualified dividends for high income earning individuals, meaning you're above $1 million, you're now gonna pay 39.6% on those long-term investments. So in my opinion, this is a pretty significant blow to those who are patient in the market. Now, a well-timed tax plan would then identify opportunities to make sure your income is below that $1 million threshold if this applies to you. But a change from the top tax bracket or the top tax rate for long-term capital gains of 20% versus 39.6%, that's almost double. So again, you want to make sure you're going to be paying attention to this stuff if you are a long-term investor. Number 5 is going to be the elimination of the step-up basis in inherited capital assets. So maybe a parent, a grandparent, a relative left you some real estate or some stock or some mutual funds, left it to your name. So the step-up basis is going to greatly impact the taxation or the tax calculations on these particular assets. Now, real estate, there's a ton of changes that I'm actually not gonna cover in this particular video. I'm thinking about separating that and actually, view the tax plan just from a real estate standpoint. But if you inherited, let's say $300,000 worth of Apple stock, well, on the date of the relative's passing, the stock is worth $600,000 and you inherited on that particular day. Well, the step-up basis basically says your basis is now $600,000. So if you go on the open market and you sell that stock for $600,000, you're gonna pay 0. Now, if you sell it for $700,000, you're gonna pay tax on the difference between what you inherited it at versus what you sold it at. Now, the elimination of this step-up basis means that your basis is going to be what they paid for it. So if they paid 300 grand for it, and today it's worth 600, you're gonna pay tax on the 300 versus the 600. So number 6 is going to be changes to business structures. So if you qualify for what's called the QBI deduction, there's now going to be phase-out limits for taxpayers who make over $400,000. Now, the other change is going to be around the C corporation structure. So if you're currently structured as a C corp, you pay a flat tax rate of 21%. Now this is going to shift to a tax bracket of 28%. Now, typically most day traders are not set up as a C corp structure, but if that is you, then there are going to be some impacts on that flat tax rate that you are going to pay at the corporate level. Again, if you distribute profits, now there's going to be an additional layer of tax. So there will be some changes to the business structure. So my goal for today was to keep this very much tailored to day traders. I'm actually going to make a future video on how this is going to impact real estate, but specific to day traders, I wanted to pull out anything that I felt like would impact your day trading. Now, I didn't actually touch on every single point of the Biden tax plan. I'd be here for the next 45 minutes or an hour. I specifically pulled out points that I felt like would impact the day trading community. Now, there are some things related to the real estate market that I'm also going to put out, just because a lot of my clients that are day traders also invest in passive income sources such as real estate. So I am going to touch on a few things in a future video around real estate, but for now I kept this focused on day trading. So nobody truly knows what's going to happen. As of today, right now, the House is more Democratic and the Senate is more Republican. So for any legislation to truly pass, it's going to have to pass both. It may pass the House and the Senate kicks it back. So there's going to be a lot of checks and balances and some movement of parts and some rumblings. But for anything to actually get passed, it's going to take a while. They're going to actually have to get, sponsors to push these bills. If you enjoyed today's video and you found value, don't forget to tax that like button. Have a good one.